Bugs Bunny was one of my favorite cartoon characters growing up because he was such a prankster. His adventures between Yosemite Sam and Elmer Fudd were some of the best episodes ever. I mean, the way he would turn the tables on those two was not just comical and hilarious, it was also diabolical and genius. While Yosemite Sam was a natural hothead, seeing him get upset with Bugs wasn't that big of a deal. But Elmer Fudd was different. He was just hunting for a rabbit. And while he would get upset with Bugs, there was only one thing that would send him through the roof. Bugs could shoot him in the face, blow him up, put him in a wedding dress, but it wasn't until when Bugs would kiss him on the lips that would send Elmer Fudd into an uncontrollable rage. Everything was all fun and games until that kiss on the lips. That was a step too far for Elmer. Well, my friends, we didn't know it, but we kissed the powers that be on the lips back on December 1st. In fact, not only did we kiss them on the lips, one of you degenerates slipped them some tongue during that kiss. Everything was going exceptionally well, with gold reaching daily, weekly, and monthly all-time highs, but that was part of the problem for the powers that be. All this exciting news created a buzz and caused a huge shift in momentum. From there, we all know what happened Sunday, December 3rd. In order to really understand what to expect in 2024, we really need to understand what happened over the last 3 months, and in particular, the last 2 weeks. Now, there was a lot of commentary about what happened at the end of November / beginning of December, and frankly, Jeffrey Christian from the CPM Group and most recently Vince Lanci have given the best explanations of the backstory behind that price beatdown at the beginning of the month. Vince's interview was on Peter Grange's channel, and I encourage you to check that out. I'm going to do my best to summarize what he shared here because, again, I think it's invaluable when it comes to setting our expectations for the remainder of this month and the start of 2024. Ultimately, that close on December 1st triggered a cascade of dominoes that ultimately drove prices dramatically higher and caused the price of gold to gap significantly higher Sunday when markets reopened. The way Vince described it, it really sounded like a perfect storm of issues related to China receiving a delivery of 4,000 tons of gold, short covering, trigger buying because of gold reaching new highs, and a big investment firm having to deal with a major redemption issue. Vince also pointed to an arbitrage of the Shanghai gold price closing higher than the actual future price in that market. Vince made a great point that the powers to be here in the US can't really have gold take off because gold is the competition with the US dollar. Remember, all year we've seen gold make all-time highs in almost every other currency except the US dollar. So when gold broke into uncharted territory in terms of price, that triggered the CTAs to start buying. And for a brief moment, we got to see how fast and how high gold could really run. Similar to Bugs kissing Elmer Fudd and sending him into a rage, well, that's what gold did. It kissed the Fed and the market makers in the mouth, which sent them into a rage, which resulted in the price beatdown. I don't really believe in gold and silver price manipulation specifically. That's because I believe all markets are manipulated, and what they did to gold and silver was a clear reminder of that. Just like episode 5 of Star Wars, the Empire struck back, and they had to because gold and silver are the anti-fiat, and anything that makes a dollar look bad must be beat back into place. That goes for any country currency, Bitcoin, or good old-fashioned gold and silver. Fast forward to December 13th, and Jerome Powell put on his proverbial dovish white suit as he had no choice but to put it into the charade of potentially higher interest rates for longer and more rate hikes. That, my friend, is exactly what the markets were waiting for and wanted. Here's the irony of what got lost in this irrational exuberance. The Fed almost always cuts rates because they are trying to stimulate the economy, meaning things aren't going well. We still have underlying issues in the economy. Consumers are doing insane things with their credit cards. We're starting to see weakness in oil demand. OPEC keeps cutting production, and I can keep going on. Regardless, the stock market took off completely ignoring that the Fed policy of easing is usually a negative sign for the economy and for the markets, not a positive one. On top of that, take a look at this chart produced by Nick Gurley from Reventure Consulting, which shows that since 1955, unemployment rates tend to spike after the first Fed rate cut. The yellow lines here indicate when the Fed cut rates, and what do you see 3 to 6 months after that? Unemployment spike. Regardless, bond markets and mortgage rates fell as investors began penciling in even more cuts to the interest rates. The FOMC members updated their projections for future interest rates and estimated that the Fed fund rate would be around 4.6 by the end of 2024. At 4.6, that basically means we should expect them to cut rate 3 different times, a quarter of a point each time. Now, I understand why us stackers were excited and the gold and silver markets responded, with gold increasing over 1%, silver going up about 2.5%. But did you also notice what happened to the miners? The GDX went up 6%, and some of the big caps went up 6 to 12%. That's the leverage the gold price miners gives us, and that's why I'm so bullish on miners. No matter how exciting the last few days have been or how wonderful it is to see gold trading above 2000 again, there's something about that price beatdown at the beginning of the month that still bothers me. Forgive me for a moment, but I'm going to put on my tinfoil hat. It seems to me that what happened in response to gold streaking up to $2,150 was the powers to be freaking out and they were actually losing control. It seems like they knew they couldn't have gold absolutely taking off coming into this week with the economic data coming out, along with a dovish Jerome Powell waving his little white flag while simultaneously admitting that higher for longer was a farce and rate cuts are coming. They knew Powell's comments were going to be like jet fuel for the stock market, but especially for gold and silver. For a moment, just for a moment, let's go to a fantasy land and just pretend. Could you imagine where gold and silver prices would be today if the powers that be didn't intervene last week? $2,300, $2,500? I mean, the money flows would have shifted faster than a Dodge with a Hellcat engine. Anyway, let's not forget that just in October, gold was at $1,810, which means that the move to $2,150 was a $340 swing or a 19% increase in just 2 months. I truly believe that they know they can fully control the stock market, but the gold and silver markets terrify them right now, especially with all the international buying and the central bank buying. Under normal conditions, they really aren't concerned about our pet rocks, but right now they are, and that is a real significant issue and a significant and important takeaway from 2 weeks ago. They couldn't let gold rally. They couldn't let us end the year at record highs. They couldn't let gold and silver compete against the almighty dollar. They couldn't let the discussion of BRICS go back currency, no matter how unlikely I believe it is. They couldn't allow that conversation to continue and gain more voices. They knew they couldn't let gold and silver start 2024 with a tremendous amount of price momentum. After all, they still need to sell their trillions of dollars worth of bonds. What they did was pure psychological warfare, and it worked temporarily. They got gold all the way down from 2150 to about 1980, almost 10% lower. More importantly, they are trying to Pavlov's dog us. They want us to associate gold reaching all-time highs with a violent and volatile price beatdown. The next time gold reaches 2150, they want us to remember what just happened and have a mental association with it. Why? So that we will naturally moderate our behavior and lower expectations, thereby slowing down the price momentum when we get to these new highs, because we'll be exercising more caution. That's what they want. We kissed them in the mouth, and now they're pissed and panicked at the same time. But the metals are climbing back, and this time they are bringing their mining friends with them. Finally, we are at a place where gold and silver simply can't be stopped. The counterfeiting, the dollar debasement, the money printing, and the over-financialization of the markets has finally caught up to them, and now they have to pay the piper with gold and silver increasing to account for all this. They simply can't stop what gold and silver are about to do. At best, they can try to dampen the movement. Let me give you another analogy. What's happening right now is like an oil spill in the ocean. All you really can do is try to contain it and limit its damage that it does. So what does all this mean, and what can we really do? Well, we know the economic data, while bad, isn't quite horrible yet. Even with the recent jobs data, CPI numbers, and inflation figures boosting this narrative of soft landing, we all know that is highly unlikely. Underneath the surface, underneath it all, there are a lot of cracks, and that is what the inverted yield curve is telling us, as well as weaker oil and gas prices are telling us. They are simply saying something bad is coming. What that is may be difficult to predict, and in some ways, I don't even think that matters, because there are really 3 things that you can do regardless of what the event is. And if you're a follower of Stackers University, you should have been doing this at least for a year now. 1, you stack what you can. While my preferred metal is gold, silver is entirely too cheap right now, and the potential upside is far greater than gold, at least percentage-wise. Remember, potential is also a French word for you ain't done crap yet. So keep it reasonable. 2, liquidity in cash reserves. While gold and silver are definitely a different form of cash reserves for me, please, please, please have at least 3 months of cash savings. I know your first instinct will be, I'd rather invest that in metals and see it appreciate. And I hear you. But when gold and silver continue going up, do you really want to be in a situation where you would have to sell it for some cash at that moment? Call me crazy, but that would feel like it would be incredibly emotionally painful. 3, control your emotions. Now that the Fed and the market makers have made it clear that they are at war with gold, we need to be emotionally prepared for a knockdown, drag out fight. And if they happen to get a lucky punch in and knock us down temporarily, I want you to have the liquidity and the emotional control to dust yourself off and deploy those reserves if a once in a lifetime opportunity presents itself. For example, let's say there's a worldwide stock market crash or even a worldwide cold that kills people, you know what I'm talking about? And everything gets sold off. Wouldn't it be nice to have a stack of cash that you could use to buy things for pennies on the dollar in that situation? You will only be able to capitalize on that if you have the cash and the mental toughness to take action. All in all, 2024 will be a great year for gold and silver, but that doesn't mean it will be smooth sailing. The powers that be just showed us that they're going to do everything they can to try and stop the inevitable. We already knew that, but now that we've kissed them in the mouth and someone slipped them some tongue, it's on like Donkey Kong. They're going to do what they can, whatever it takes, to make this as painful and as long as possible for us. So expect 2024 to be even more volatile. Expect price run-ups and 50% retracements. Expect to see days where price goes up 3 or 6%, only to be down the next day by 2 or 3%. Even if it's not an all-out war, it at least will be a tug of war. In the comment section, am I a little crazy when I say that the gold and silver price beatdown was a coordinated attack by our government? Do you think 2024 will be more or less volatile than 2023? Or simply put an A+ in the comment section to let everyone know that you always stack smarter and never stop learning.